Hello guys, it's Chris again from the tradingexchange.co.uk, and today we're going to take a look at doing some live trades using a moving average strategy, which is going to help you guys get into and get out of some trades that are hopefully going to be really profitable for you, earn loads of points and pips, and get you building your own trading business. Okay, so I'm going to log into the remote desktop with my charting package here, and I've got a simple account ready here. It's with FXCM's trading station that the charts will be on, and FXCM that the account is with. It's loaded with £5,000, and I'm going to put on a few live trades. You can use whatever charting package you like, so MetaTrader or NinjaTrader, whatever it is you want to use, FXCM. If you don't yet have a trading package set up and you want to follow this one, then there's a link in the comments below, in the description even, where you can go ahead and create your own link or account from our link. And if you do decide to do that, then we will be able to give you access to the website for 1 month absolutely free as a thank you for using our link. So go and check that out. Okay then, so let's go and take a look at some charts. So the chart I've got in front of me here is a German DAX chart. It's just personal preference of mine. You might want to trade a forex pair or a commodity or another index, but the German DAX is my preference, so I'm going to go with that. And so we pretty much come to our first rule. Now, we're going to be trading with moving averages, so I'm going to have to assume at this stage that you know what moving averages are. If you're not familiar with moving averages, then there is a tutorial video on the website. Go and check that out. And once you're happy with how they work and putting them on a chart, then come back and continue the video here. So the first thing we need to try and work out with any market that we want to trade is, what's the underlying trend? And that's quite an ambiguous question because it really depends on what type of trader you are, whether you're trading just in the short term or whether you're kind of like a scalper, or maybe you're a day trader and you're happy to sit on a trade for a few hours, or even a swing trader where it might be open for a few weeks. So the time frame that you decide your trend will be different depending on what type of trader you are. For today, we're just going to be taking a look at short-term trading or day trading as well, even not swing trading. So we're going to be looking to pretty much get in and out of our trades quite quickly in order to make fast money and move on to the next trade. Okay. So what's the underlying trend? Well, I've got a 30-minute chart here at the moment on the German DAX, and you might sort of say to yourself, well, it's bearish. Look at this kind of down move here from mid-January. We've kind of taken down to new lows at around about the 9,300 level. Now, bearing in mind, it's 2016 January at the moment, and we've just carved out a major low of the recent swing, and we've tested the lows from back in, I can't zoom out far enough, but I think it was probably about September, October maybe last year, but I'm going to need to check that. Yeah, October last year, and then of course September when we also had that mini crash, and then the previous year of sort of October, November. So you might say it's fairly cyclical, but we've kind of tested these lows recently, so you might say that we've certainly been bearish since December, so the underlying trend is down. But when you zoom in a little bit further, I mean, I've just noticed, based on the back of a news release from yesterday and today regarding the ECB's monetary policy rate decision and commentary, that we have broken this mini trend here, and we've actually broken to the upside. So I'm, in the shorter term, thinking we're actually bullish. So if you can kind of follow what I'm saying there, and just for the purpose of the video, agree that we're going to be bullish. So we've had this trend broke to the upside, it's been tested and then bounced, so we're going to be looking for buying trades. So that's the reason we want the underlying trend, is because we want to follow that trend. We want to take trades in that direction. So we're agreeing that if we agree, should I say, that we're bullish. Let's zoom into a 5-minute chart, and you might agree with me a bit more there. Here we go. Ask a child what direction that's going in, and I'm sure they'll all agree that it's going up. So the underlying trend for the moment in the very short term is bullish. We're looking for trades to go long. Okay. So what we're going to do is we're going to apply a moving average, which is hopefully going to confirm this. And for the purpose of the video, I'm going to use an exponential moving average. The other option you can choose is a simple, or I don't know if smooth moving average is maybe another way they call it, but I'm just going to use an EMA, an exponential weighted moving average. So let's click on that. I'm going to choose a 50 period moving average. The reason I like a 50 is because it takes into account quite a few candles. One large candle doesn't always manipulate the data that much. It smooths it, or it kind of works it out over the last 50. And that will give you an indication of what sort of trend we're in, and that agrees that it's bullish, it's pointing upwards. Okay, so the next thing we're going to need to then do is to, once we've understood the underlying trend, which in this case is bullish, we then need to find out, are there any opportunities to buy? Excuse me. So in this case, are there any opportunities to buy? And the way that we're going to find that out is to apply a couple more moving averages. Okay. And the other moving averages we're going to take a look at are going to be much faster moving averages than this 50 line here. And for the sake of this video, I'm just going to make that line a bit bigger and make it, I don't know, black. Okay, quite contrasty, but at least you can see it. Excuse me. Okay, so the next moving average that I'm going to add on here is going to follow the Fibonacci sequence of numbers. Some people like to use round numbers or multiples of 5, like 5, 10, 20, 40, 50, 100, 200, whatever. And I guess that's fine. It's a nice round number if you like that. But I'm going to be using Fibonacci sequence of numbers for the simple fact that traders, algorithms, institutions, they all seem to follow this rule of Fibonacci. It's kind of like a self-fulfilling prophecy, as we've mentioned in previous videos. The more people that follow it, the stronger reaction these numbers have. Excuse me again. Okay, so we're going to go and add another exponential moving average. So we know the Fibonacci sequence of numbers. So you've got, normally I don't tend to go from any lower than 5. So a 5, an 8, a 13, a 21, a 34, a 55, so on, so on, so on. Probably won't go any higher than that. And I'm going to choose a 5 period moving average, which is very, very fast. That will move a lot, and let's just make that whatever colour that is. Being colourblind doesn't help. It's quite thin, can't really see it. Let's just make that maybe a little bit thicker. Okay, so there's the first one. And the next moving average that I'm going to do is, or I'm going to add, is a slower moving average. So the first one was a 5. The next one I'm going to add is, let's just say 13. Hesitant to say that because I was thinking maybe I would choose a faster one, but let's change the colour so it's a little bit more clear. I should be better at choosing colours. I have no idea. Okay. It doesn't look particularly pretty, and I'm sure you can get a chart set up much more attractive than that. But what we can see here are two moving averages that seem to be oscillating around each other. Okay, they're moving one way and then the other, and they're crossing over each other. And what we're looking to do is we're looking to find situations where, as we're bullish, we want the fast line, which is this colour, to cross below this line, which is the slower one, and then we're going to enter a trade once it looks like it's about to go back up again. So it's crossed back through. So for example, right there, that point there, crossed to the upside, we would have got into that trade, and you could either choose a target of pips, 10 10, 20, 30, 40 pips or whatever and get out. You're done. You've made your money. Or you could wait until it starts to cross back at the other side and get out at that point. Either or, historically, we've made money on this. Another option was there. And for the sake of this trade, we've missed it by 1, 2, 3, 4, maybe 5 candles, so we're a little bit late. But what you would really want to try and do is to wait for the candle to close to confirm that there's been a crossover. Okay, so I'm on a 5-minute chart at the moment using a 50 period moving average, and I'm going to move that to a 1-minute chart with this 50 period moving average still being my indicator. Now 1-minute charts, I don't recommend you trade on these. I'm just doing it for the sake of the video. Okay, 1 minute is full of noise. It's really granular data, but the shortest of moves can really kind of throw traders into a false sense of security. You can't really pay too much attention to these candle pattern formations on 1 minute. But let's just assume that it's a higher time frame, and we're going to actually wait for this. You can see right now that you've got this grey fast moving average about to cross over this blue moving average, and if that happens, we can buy. And the reason we can buy is that we've already seen on the previous chart, the 5-minute chart. Let's just go, and the 50 period moving average on that 5-minute chart, which I'm now going to change the look of, there it is bullish. So we're looking for buying signals, and I have just spotted that the candle's about to close. Once that candle closes, if that cross is still there, I'll just buy. I'll go into a buy trade and we'll have a look and see if it works. I'll go for £1 a point. I'll aim for well, good point. What were we going to aim for? Now, 20 points I'm going to choose, and I've just plucked that number out of the air. Okay, we've just had a cross. It's confirmed the candle's closed. We've had a cross there. I'm going to buy. Okay, so I'm going to go back into here. I'm going to click on the buy for German DAX. I think about 13 is £1 a point, and I'm going to enter the trade. Done. Okay, so I haven't actually entered any stop losses, and I haven't entered any take profit targets. I've just simply entered that trade just to show you how and what rationale I've used to do it. Now, if the trade does go against you temporarily, it's one of those things. You need to be able to stomach a little bit of drawdown, but you need to factor that into your risk. Now, I'm prepared to risk as much as 25 points for this trade, and which means I'm probably going to want to go for at least that again in return for a profit. So I'm going to go and set 25-point stop loss for a 25-point return. Find out how we get on. So we've opened the trade at 9764. Let's do your maths. I think that's 39, so 9739. There we go. And we're going to target 9789. There we go. Trade's been de-risked. We're looking at risking 25 points, £25. So relative to the equity or that we've got in the account, that's 0.5% of the account balance. Okay, now certain trades will lose. Okay, you are going to lose a couple of trades every now and then. So what I would normally be recommending that somebody does is to not go for a 1-to-1 reward to risk ratio, which is what I've just done. Because ideally you want your winners to be bigger than your losers. You want to win 60, 70, 100 points when you're risking 25, whatever it might be. But when you catch a good trend, you can really, really ride these for quite some time, and it can make your entire week. Sometimes a single trade can do really, really well if you just continue to move your stop losses and ride the trend up as it continues to move up and up and up. So the key thing really to trading is to not really get too stressed out about having a losing trade. It's going to happen, but the key is to try and maximize your profits. I'm just showing you at the moment how you would go about making a decision to get into a trade. Some of them work out, some of them don't. Okay, so that is to use a 5-period moving average and a 13-period moving average. Okay. Now, I'm going to have a little look and see whether or not we have got the same kind of thing on any other market. So let's just go and change this to another market. Let's go to the euro or the dollar yen. Here we go. So this one again, it has that 50 period moving average, which is bullish, clearly bullish. So we're looking for buying opportunities there. A good opportunity to have bought here would have been on the actual test of this moving average, the major trend moving average. When it came down here and tested that, we had a cross around about here. So anybody that would have got in around about there, they would have had to stomach a little bit of drawdown as it came back down again, but up it rallied, and you would have scored some decent points on that. Let's take a look at another chart. So the euro dollar, I personally would consider not trading this one simply because, and this is a valid point, the moving average, the trend defining indicator that we're using, is moving sideways. And so there isn't really any trend to follow. There was here, and that would have been a nice trade perhaps, where it touched that moving average, although it was at the actual top of it, almost looking like a trend reversal as it broke to the downside. But maybe here or here, when it started to come up towards that moving average and test it, here, another example, when you would have had an individual cross around about those kinds of levels to the downside, would have been a really good trade. But here at the moment, there isn't really any clear direction, so I'd probably avoid it. Cable. Had a bit of a relief rally, certainly in the short term, but I think we can all say that in the last few months, this has been the most incredible trend to trade. I mean, let's just have a look at it on the 1 hour chart, for example. Now that 50 period moving average trend indicator probably won't work now because I've moved to a 1 hour chart. I say a 1 hour chart, there we go. It's just lagging a little bit. There we go. Let's just go and re-enable that one. There we go. So clearly bearish. As we zoom out, you can see for quite some time this has been really, really quite heavy. So at any point here, really, where we've had this trend indicator and the moving average has touched that indicator, whenever there was an individual cross zoomed in a bit further, there would have been a brilliant opportunity to get in and trade, go short on that market. So just having a quick check on the trade that we set up earlier on. We have been sat on a little bit of drawdown, but the trade is still on. It's still ready to move. So, you know, we're looking on a 1 minute chart for these trades. So there's not a huge amount of technical analysis gone into this. This is just to show you the process of activating a trade. Okay, here would have been a good example again to get in and trade, and you might even say that right now we're currently, unless we're experiencing a major bounce in this pair, which I don't think we are, if we get across on these two at any point soon, that for me is an opportunity to get in and trade. If we stay below this particular part here, then somewhere around here could be an excellent trading opportunity. That might have been the perfect entry actually at 143. Put a stop loss above the current, the trend defining level here, and look to just continue to move down and break this low. So you could actually, from current levels, short the market, although you haven't received a signal. You might be sort of looking for a cross to confirm it, but you would be risking, let's say, 70, 65 pips for a move of over 200. £1 a point, happy days, not a bad day. And it might not require any work from you. You just simply put the trade on, 25-30 seconds of your time, and come back to it either in a few days if necessary, or even if you do get a crash, it could happen in that very day. You know, when you look at this bit, for example, that single move over the period of 4 hours was 200 points. So you can easily do that as a day trader. And that's just on one single market and one single trade. You know, not risking a huge amount, but taking home a lot. Now, I don't want to kind of sell you the dream and say that it's always going to happen that way, because sometimes it might not. But providing you manage your risk properly and you're happy to take a few small losers every now and then, for the sake that when you do catch a whale, it pretty much wipes out all of those losers and some, then you're going to do well. Just got to be able to take some of those losses. So don't risk too much. Okay, so let's just take a look at maybe another market and see what else is out there. Let's just go for a random one. Let's go for gold. I hate trading gold. It's really quite a volatile market, but it will be good to see how it looks. Okay, so certainly the cross right now has gone up. There's been a cross to the upside, but the trend is bearish in the short term. So I'd really be looking for selling opportunities. We have crossed above the trend line, like we did up here, and excuse me. You might want to say that maybe that's an opportunity to go short if you get a cross. Now, the width between these two moving averages, as you can see here, just kind of shows you how strong a move might be. And when the width is wider, you know, when they're, I guess that when the trend is getting stronger, you're going to see that gap increase. Now, gold, if anything, probably not going to set up for another few candles. I'm not going to sit here and watch that one, so we'll go back and we'll just take a look and see how the DAX is getting on. Excuse me. Okay, so we got in around about here. We had to sit on a point where it came down to sort of test this low of this pin. You might have even said that there was no other opportunity to get in and trade that, but we won't. Once we've got a single trade on, we'll leave it. Now you might ask yourself, well, why isn't the cross there anymore? Well, it kind of is, but it changed. The geometry of the lines changed because of what price action did after the next few. Now, moving averages do what they say, they move. And so we've got 5 pieces of data for one of them and 13 pieces of data for the other one. So when a new candle forms, it's going to delete the very first point of data. So it might change the way that the line sets up. And because we actually had a couple of negative candles after we entered the trade, it pulled the moving average down, so it changed the way it was setting up. Nonetheless, we entered the trade, we're in. We'll just wait and see what happens with it. So I hope some of that helps you guys. Now, the next lesson we're going to go into is to go into a bit more detail on a few more strategies for trading this. We're going to do a few of these, but this kind of gives you an idea of how to set up a 5 and a 13 period moving average over a 50 period moving average trend indicator. Go and get some charts set up, put the averages on your chart, go and have a look at a few markets and find out if you can see any opportunities where you had those moves. And we'll be back with another video.